Finally, some good interest rate news. The spread is breaking. So the market's been range bound since April, but finally seeing some good news here. The 10-year Treasury has been up, but the rates didn't follow. So let me break down why. So this difference between the 10-year Treasury, which is currently at 4.4, and the average mortgage rate, which is currently now 6.75, is the spread. And this is what has kept rates up even though the Fed cut in September. The spread between the 10-year Treasury and the mortgage rates is historically 1.6 to 1.8. So using today's number, a 4.4 Treasury yield would equal rates of 6 to 6.25. But we haven't seen that because we've been closer to 7%. And that's because the spread has been way above historical averages. It's been as high as 2.6 at some points throughout this. So we've been at almost 7% rates. So we have almost a point that could disappear without the rates being cut. I've been saying this for months. It's based on volatility, a lot more than you think. It's based on bank greed because it's no hiding that. They see the market strong, people are still buying houses, and they know if they can get you at a 7, then when the rates come down, they build themselves a nice little refi pipe of you going from 7 to 6 to 5. But I think with the data coming out, everyone's starting to see the slowdown actually coming, and they're like, let's ease off this a little bit. Because for the first time ever this year, the spread dropped to 2.35, which means that even if the 10-year Treasury went up or didn't move, rates came down. So that could be an early sign of the rates being lowered. One, they're expecting an interest rate cut, which is kind of what we're all expecting at this point, that the data is not pointing towards more inflation and that the underlying data is showing that we're actually slowing down. And if they do interest rate cuts plus lowering the volatility, we could be at that 5.5 number sooner than we think. So for once, I know my market updates are always negative and it hasn't really been good news. But for once, this is the first time I came back because I'm on vacation. I came back and the 10-year Treasury was higher than I left, but rates have actually settled down to lower. So very positive sign. I'll keep you posted.